Hi, and welcome to CMS Forex News. I'm Christina Robinson, and today's Friday, March 21st, 2008. Movements in markets today were subdued as countries around the world were celebrating Good Friday. The stock markets were closed in the U.S. and in UK. In this quiet session, the greenback managed to hold on to its gains from earlier in the week. On Monday, the dollar was pressured by record prices in commodity markets and turmoil in financial markets. Bear Stearns barely staved off bankruptcy, only to be saved by J.P. Morgan's planned acquisition. The Federal Reserve made several moves to calm markets. Last week, it made $200 billion available to banks and said that it would swap treasuries for mortgage-backed securities. After the Bear Stearns news hit over the weekend, the Fed made three moves. First was an emergency reduction on the discount rate, the interest it charges banks when they borrow from the Fed. The second was the lending of $28 billion to U.S. securities firms in its first extension of credit to non-banks since the Great Depression. Finally, it cut its benchmark rate by 75 basis points on Tuesday to 2.25%. After being pummeled throughout February and March, the dollar will post its first weekly advance in a month against the euro. It also fared well against most of its other rivals this week. The euro-dollar pair had reached a record high of 1.59 on Monday following the news of the sale of Bear Stearns. Since setting that high, the pair has swung down almost 450 pips and was trading near 1.5440 by the end of Friday. The moves by the Fed, the better-than-expected earnings reports from other U.S. investment banks, and a fall in oil and gold prices helped to strengthen the dollar. It remains to be seen if this will turn into a new downward trend, with the possibility of hitting 1.50, or if prices will consolidate around this range. As oil and gold markets fell, countries that are tied to exporting commodities, such as Canada, Australia, and New Zealand, saw the value of their currencies decline. The U.S. dollar-Canadian dollar pair saw a change of 370 pips this week, with most of it coming in 2 days. In this daily chart, we see that it is approaching its old peak set on January 22nd, which will be an important resistance level. The Australian dollar-U.S. dollar pair formed a double top pattern and dropped 500 pips from its multi-year high of 0.9500. If the pair falls below 0.89, it may have a chance to correct further and test its old support near 0.85. In the Aussie-Yen pair, we see a continuation of a downward trend started 4 weeks ago after it set a peak near 101. It is now 1,000 pips lower, with about 400 pips of that fall coming this week. The yen is gaining as financial markets have become more risk-averse and carry trade continues to unwind. The New Zealand dollar had similar movements against the greenback and yen. The pound-yen pair, another favorite of carry trade, slipped as much as 17,000 pips since its high 3 weeks ago. It's the first time that the pound has dropped below 200 yen. Since the start of the new year, the pair is down an impressive 3,000 pips. The beginning of next week will again see low liquidity as some countries observe Easter Monday. Important releases during the rest of the week include U.S. existing and new home sales, along with new orders for durable goods. Canada will unveil retail sales for January, while Germany and the Eurozone post their IFO measures of business sentiment. And that's it for news for this week. Thank you for watching. Join us again Monday right here at cmsfx.com.